Yesterday, the euro failed to hit a new weekly high. In late trade, the European currency slid, driven by the fact that buyers locked in profits at the end of the month. Nevertheless, an upward correction remains intact in the market. To extend gains, bulls need to regain control of 1.0606. As for the British pound, it surged amid the news that British Prime Minister Rishi Sunak struck a deal with the European Union on post-Brexit trade rules for Northern Ireland. However, in the second half of the day, its upside momentum fizzled out. As a result, the pound sterling collapsed in a choppy trade, hitting a new daily low. Yesterday's data on US consumer confidence proved to be worse than expected but did not weigh on the dollar. Traders remained bullish on the greenback in anticipation of further interest rate hikes by the Fed. Today's macroeconomic calendar is full of important releases. Germany is set to release statistics on retail sales and unemployment. The number of unemployed is forecast to show a gain of 9,000 from a previously reported decrease of 15,000. The unemployment rate is expected to remain unchanged. Also, it is worth paying attention to data on factory activity in the euro area and the UK. The Eurozone manufacturing PMI is anticipated to slump to 48.5 in February, down from 48.8 in January. Factory activity in the UK is forecast to stay the same, with the manufacturing PMI standing at 49.2. If the indicator rises above the 50 mark, the pound sterling may well continue its bullish run. The British currency may also be supported by Bank of England Governor Andrew Bailey's speech. He is likely to stress the need to keep lifting interest rates as inflation remains high. Traders may also take notice of German consumer prices. The inflation rate is expected to slow slightly to 0.6% in February from 1.0% a month earlier. If the figure exceeds analysts' forecasts, the ECB will have to adjust its monetary policy. This, in turn, may exert pressure on the euro. Furthermore, the Institute for Supply Management will release its index summarizing economic activity in the manufacturing sector in the US. The PMI is projected to remain below the 50 reading, indicating contraction. This may drag the dollar down. However, it may be the other way around, given that the greenback reacted to yesterday's downbeat statistics with gains. In case the indicator tops market expectations and rises above 50, the dollar will extend its rally against the euro, both the euro and the British pound. And now let's move on to technical analysis. According to the euro-American dollar trading chart, I believe that bears will make every effort to protect the level of 1.0606 in order to push the quotes further down. A false breakout at this mark will create a sell signal. Thus, the euro will slide to 1.0567 and probably break through it. If the price fixes below this level, an additional sell signal will be generated. In this case, the European currency will fall back below the February low of 1.0533. Its breakout will open the way to 1.0487 and 1.0451. At these levels, I recommend going long on a rebound. Long positions at 1.0567 and 1.0533 can be considered only amid a false breakout. As an alternative, if the price consolidates above 1.0606 and tests it from the top down amid upbeat data from the euro area, it will be possible to buy the pair, counting on a rise to 1.0644 and 1.0682. At the level of 1.0682, it would be a wise decision to go short on a rebound to catch an intraday correction of 25-30 pips. Going short at 1.0644 will be relevant only in the event of a false breakout. Speaking of the British currency, the situation is similar. A false breakout at 1.2053 will create a sell signal. In this case, the pound sterling will dive to 1.2009. If the price fixes below this mark and tests it from the bottom up, the volume of short positions will increase further. Thus, the British pound will plunge to 1975 and 1.1941. At the level of 1.1941, traders are recommended to go long on a rebound. Long positions at 1.2009 and 1.1975 can be opened only amid a false breakout. In case the pound sterling settles above 1.2053, supported by positive data on UK manufacturing activity, its top-down test will make it possible to buy the pair in the hope of an advance to 1.2097. At this mark, traders may go short in the event of a false breakout. Short positions on a rebound can be considered at 1.2138, counting on an intraday correction of 30-35 pips. Best of luck!